Let's take in the shoes off. I suspect it is the time to get comfortable. Try to get rid of that glare. Also, while we're at it. Hey everyone, this is Kevin the Apptrepreneur. I've got my water. I hope you get yours too, because here's what we're going to do in this video. We are going to be discussing the first earnings report from Uber since becoming a publicly traded company. Now, a bit of a heads up, and of course I do this not only to inform all of you watching this in the future, but to give people in the present a chance to come in. This is a live stream video. Therefore, we have no idea how long it will be. I can't even guarantee you that the most important information is going to be within the first 15 minutes. For this one, it might be closer to 20 minutes. And as such, we can go off topic. Anything can happen. We will not be giving away any videos today, though. We will be waiting until Sunday before we start giving away the movies. I think Sunday is going to be my movie giveaway night, so to speak. Kind of like, I don't know, Sunday was always just a movie night for me. You know, Sunday night at Blockbuster, The Wonderful World of Disney on Sunday, you know, just things like that. So anyway, Uber has had their first earnings report since becoming a publicly traded company. Now, I have tried to avoid reading anything. I made a prediction, I think in one of my videos today, that Uber would report a loss of $1.5 billion. That's been fairly close to what they've been losing for the most part. I expect a lot of losses. I expect a slowing of growth. And according to this headline from Fortune, which I can't show unfortunately, it says Uber's first earning report offered no surprises for Wall Street, which means essentially Wall Street expected this, and who knows how that's going to play into when it comes to the stock. We'll also look at how the stock is doing afterwards, although some people can check that out real time. So anyway, Kevin Keller, wow, like the Archie Comics character, starts this article by writing, 3 weeks after staging one of the biggest tech IPOs in years, Uber delivered its first ever earnings report Thursday, with revenue growing 20% and a net loss of just over $1 billion. Both figures were in line with investor expectations. You know, you really got to be in a special kind of investing when it's like, oh yeah, I expect them to lose $1 billion. There's just something really, really off about that. Uber said revenue advanced 20% to $3.1 billion in the first quarter of 2019, propelled by a 36% increase in the number of trips and a 34% increase in ride-sharing gross bookings, which totaled $14.6 billion. Yo, Mario, yo, the bear. I think that's what it is. So, almost $15 billion. And the company's net loss was $1.1 billion or $2.26 a share. Wall Street analysts had forecast revenue of $3.8 billion and a net loss of $1.1 billion. So here is where of course, things can get a little tricky sometimes with investment. So analysts had expected a $1.1 billion loss. So that was not a surprise. And really, it couldn't have been a surprise at this point, because whenever Uber's been pretty upfront about how much money they lose. And every quarter, it's somewhere between 1 to 1.5 billion. In some cases, it's 2 billion. So they've been upfront about that. Now, analysts predicted that the revenue would be 3.8 billion. In that sense, they came up short. And it's kind of funny because when companies come up short of analyst or investor expectations, that could hurt the stock. I'm not saying it will. I haven't checked the stock today. We'll check the stock after we're done discussing this. And they continue. Earlier this month, we took the important step of becoming a public company, and we are now focused on executing our strategy, Uber CEO Dara Khosrowshahi said in a statement. Our global reach continues to be an important differentiator, and we maintained leadership of the ride-sharing category in every region we serve. Which, by the way, that's not an untrue quote. He is telling the truth. They do rule the ride-sharing community. Uber's IPO was the most prominent offering among a group of brand-name tech companies going public in 2019. The company raised $8.1 billion for the ride-sharing company on May 10th after offering its stock at $45 a share, a price that was at the low end of the expected range between $44 a share and $50 a share. Since then, Uber stock has largely been seen as a disappointment, trading below its offering price since debuting on the market. It closed official trading Tuesday down. So, okay, this article says it's down to $39.80 a share. Well, since they already said that, let's see what it's if that held true, because I think they reported these earnings like an hour before Wall Street closed. So, okay, here's the interesting thing. I can't show you it. It did close at that. However, in the after-hour trading, it's up to $40.96. At one point, getting as high as $41.26. That's funny. I mean, and here's the thing. I'm looking at recent news underneath this stock chart, and one of the headlines from the street is Uber shares rise as company loses less money than expected. That seems like a very, very low bar to have to pass. Like, oh, well, this company's succeeding because we're not losing as much money as expected. I mean, investors are funny sometimes. Other well-known tech companies that have gone public in 2019 after staving off their IPOs for years have disappointed investors when posting earnings for the first time. Earlier this month, Lyft stock tumbled after posting a surprisingly large 1.1 net billion loss, raising questions about the outlook of the ride-sharing business models. Pinterest stock also sank after warning that its earnings may come in under analyst expectations later this year. Oh yeah, by the way, Pinterest went public, and Pinterest is getting killed on Wall Street. What did Pinterest get? I know we don't normally talk about this, but Pinterest stock. Okay, it's at $25.51. It opened at 24, and the highest it got was 29.85. It's down to 25.58. So yeah, this thing is not doing very well. But here's what's interesting. Lyft loses $1.1 billion and their stock sinks because it raises questions on whether or not this is a profitable business. Uber stock soars at losing $1.1 billion because they didn't lose as much as they expected to lose. And hey, since they lost less than what we expected them to lose, they must be doing great. This is a very, very weird company to watch. They break so many rules of the investment world. It's crazy to just look at this and think of how this is going down. In my opinion, I think that how should I put this? Well, actually, I could put this as simple as possible. They should not be. You should not be successful if you're losing money. If you're losing money, you're not a very good business. I understand losing money during hard times, but when like you go for years just ciphering money, I don't think that's a successful business model. Let's see. Yeah, what happened to 180 days of change indeed. So it's going to be fun to watch Uber and Lyft do this. I truly don't know where they're going to go from here. They can't lose money forever. I mean, Amazon could, but Amazon's a very unique situation. Most companies, you lose bill. Heck, Wall Street will usually kill you if you report earnings that are less than expected and you still made money. Like, I have seen company stock drop because a company got up and said, so guys, we only made up 1.5 billion. We missed our target audience, right, we were supposed to make 2.2 billion. We made 1.8 billion, and their stock drops because like, oh, this is not a stable company. And yet Uber, Lyft, Amazon, Pinterest, Netflix, these are all companies that continuously lose money, and the investors seem okay with that. So the first, and I guess we could wrap this up in a minute because there's really not as much to talk about this as I thought there would be. So, hey Ryan, my day's going pretty good. Keep an eye on my other channel for a Disney-related video, by the way. So, yeah, there's really not a whole lot to talk about in this case. Uber lost money. The investors kind of gave a shrug. That might make them bulletproof. You never know. But I was going to make a video about this tomorrow. However, after looking at all the videos I have for tomorrow, I have 3 up for tomorrow, by the way. I kind of decided, yeah, this might as well just do like a quick little live stream and just talk about this real quick. We don't need to make 4 videos tomorrow. I don't know if I even like making 4 videos today. And it's clearly I picked the wrong time to do this because there's not a lot of people here. So anyway, thanks to the people who did join me. And what do you folks think? Did any of you buy Uber stock? What did you think of, the Uber stock prices? The Uber stock right now, it closed at $39.76, but it's trading at $40.99 in the after hours trading. So that's, but if any of you have bought Uber stock, I'd like to know, what do you think about this? Are you upset with the earnings? Are they as expected? Does this make you less inclined to buy Uber stock? Does it make you more inclined? If you have it already, do you want to sell it, or you're going to stay the course, and why? I would love to know. So comment below, like, favorite, share, subscribe. If you enjoy my videos, consider becoming a Patreon member. It's totally optional, of course, but even as little as $1 a month goes a long way to helping the channel run smoothly. You get access to my Patreon's exclusive blog, which I need to update soon. It kind of dawns on me. And, well, Mario just said he was thinking about buying stock, but from what he's heard, he's going to back out. Well, that's totally up to you. I've technically got a share of Uber stock. I just have the share of Uber stock just so that I can say I'm invested in this company. That's about it. But anyway, you know the drill. Comment below, like, favorite, share, subscribe, flame responsibly, all that jazz. Thank you for joining me, and I will see you tomorrow.